Good morning, everybody, and welcome to, this time really the last webinar of the year, I believe, at least on our end. Exciting to see so many of you joining us. Today, we're going to be talking about the December 16 and December 17 votes and what they mean for EUDR and Omnibus. Of course, we'll go into details on what those mean. But first, perhaps a brief introduction from those that are joining us today and don't know Elisavet and I. So we are sustainability researchers at Coolset, and for the past 2.5 years, the research team here has been working on a lot of these regulations that have been affected in this past year by either the Omnibus regulation or, for example, the EUDR case, its own kind of deregulation drive, simplification drive, have spent a lot of time researching that, looking over it, seeing what the changes have been, and covering that in past webinars, past articles, discussions with customers, discussions with companies that were reporting or not reporting in that sphere. So hopefully to end the year, we can share some of those insights with you. But of course, we are very excited to have with us today Andreas Rasche. Andreas, perhaps you also want to do a brief introduction on your end.
Yeah, thank you very much indeed, Jasper. Welcome, everybody. It's great to be here. My name is Andreas. I'm a professor at CBS, also one of the associate deans of the school, and focused on sustainability regulation in terms of my research. I followed the Omnibus process in particular quite closely, and later on I will cover that in terms of some kind of final reflections as well as the accompanying Q&A. Thanks for being here.
Thanks, Andreas. So many of you will know Andreas from LinkedIn. I know that at our company, we always refer to Andreas' insights on LinkedIn as the go-to source. So also very excited to have you here, Andreas, and get some of your insights and see kind of what you have to share with us as well. So as you know from the description of today's session, we'll do a bit of an overview first with slides. So Elisavet and I will kick off, and then we'll hand it over to Andreas. And then, of course, we'll have the Q&A. Bit of context on how the Q&A works. So on the bottom right of the page, you'll see the questions tab. Feel free to add all your questions in there. And we also see how upvoted they are. So please upvote the questions that you also want to see an answer to. And then we'll make sure that we prioritize those questions as we are expecting a lot of questions coming in today. So once again, put your questions in the question tab on the bottom right. And then we will prioritize by the number of upvotes and see who's best suited to answer those questions. So that's a bit of context for today. Let's get right into it as we have a busy schedule. The plan for today is to actually first start with 2 questions for you. I know that most questions today will be addressed to us, but we're also very curious about the opinions of the people in the room with us today. Then we'll follow on with the EUDR process and the outcome, which will be covered by Elisavet and I. And then we'll move on to the Omnibus process and the outcome, as well as the directional insights, which will both be covered by Andreas. And then we'll move on to the Q&A, where we'll answer all of your questions that you have, so that you can hopefully end the year with a bit of clarity at least on the EU regulatory side. So first question we'd like to ask you is, how has your level of trust in EU institutions changed over the past year? Let me add this question to the screen. So you should be able to see the question on your screen right now. There's 3 options. I'm more uncertain about the EU's long-term agenda. My trust hasn't really changed. I trust the EU's long-term direction less than before. More uncertain. I'm seeing that the both questions, both answers, the top and the bottom one are quite similar. So I think that's a bit of an oversight on our end, but I think the direction here is also quite clear. So we're seeing that 54% of you are saying, I'm more uncertain about the EU's long-term agenda. 39% are saying, I trust the EU long-term direction less than before. And 7% of you are saying, my trust hasn't really changed. So either way, we're seeing that there's definitely kind of a big shift happening in Brussels when it comes to the trust that the people outside of Brussels have in it in regards to the EU institutions. And I think we can move on to the next question. Are you planning to report next year under any existing sustainability frameworks? So here we also have 3 options. Yes, we are still discussing internally, and no, we have decided not to. I think this is a question that we're very curious about, just because we know that there's been delays, there's been discussions, but a lot of companies we've spoken to this year have delayed internally because of the uncertainty coming out of Brussels. So I'm curious to see if any companies have decided, okay, well, now that we know what's coming and we know what's certain, we're going to pick it up, or no, we're not going to. So let's see what the outcome is. Okay, so actually 46% of you are saying, yes, we are. 39% of you are still discussing internally, and 15% of you said, no, we've decided not to. Very interesting. So feel free to also share in the chat on the bottom right, perhaps if you have any insights on what you will report on. So are you going to report on ESRS 2.0, so the simplified ESRS? Or are you perhaps going into the more privatized direction of regulations, such as perhaps EcoVadis? Are you reporting on VSME? How is it? Yeah, what are your plans for the next year? I think those are interesting insights to have, not just for us, but for the people in the room today. So feel free to also share those insights. And then moving on to the actual content of today's session. So we'll first cover the EUDR outcome and start with a bit of a timeline. And this timeline is actually very tight. So it started less than 2 months ago on October 21st. The Commission proposed a EUDR proposal, and just for reference, also this is the EUDR section here. So then basically what that said is that there will be no delay of the EUDR, as was previously proposed by EU Commissioner Jessica Roswell due to IT issues. So that was I think a good sign for those that wanted to see a bit of ambition coming from the Commission once again. So they proposed no delay, but a grace period of 6 months. Then a couple of days later, on November 17th, the Council adopted a position in which 24 out of 27 EU member states agreed on a delay. And then a few days later, the European Parliament adopted a position which largely aligned with the Council and was made possible by a majority that we've also seen in the Omnibus file. So that was a majority of the far right and the EPP. And then on December 17th, so yesterday, the European Parliament agreed on a final text. So what does that mean going forward? Let's first have a look at the overall kind of amendments that were passed in the European Parliament. So here we're not going to go into too much detail because, I think the technical amendments you can also find in the relevant disclosures. But I just want to kind of give you an overview of the coalition on how they voted. So what we're seeing here is that for most major amendments, there was a coalition between the European People's Party, the European Conservative and Reformist Group, Patriots for Europe, and the Europe of Sovereign Nations Group. And these are groups that were unthinkable, I think, just a year ago, but now are forming the new normal in Brussels on the EUDR file, but also on the Omnibus file. And why that is interesting and mentioning, noteworthy of mentioning, is because it's a political 180. So I think this past year we've seen a lot of changes, a lot of things to be concerned about. Also, the Ombudswoman, as Andreas will cover, I believe, has flagged this process. But here what we're seeing is that the leader of the EPP group, Manfred Weber, has said only in April of this year, as a leader, I defined a clear red line to the extremists. We will never work together with those who are not respecting my three pros: pro-Ukraine, pro-rule of law, and pro-Europe. These are fundamental things for us. Now, it's quite interesting that he said this because just a couple of months later, his own party decided to work together with those extremists on major files that have a big impact on the future of European sustainability regulations. So now moving on to the current updates. So yesterday we had the final vote. So those that are on LinkedIn will have seen those votes come across your feed quite often. But essentially what we saw is that Parliament voted in favor in Strasbourg with quite a significant majority. And now the next steps are that the text must be endorsed by the Council, which we're expecting to happen without any further hiccups, and to be published in the EU's official journal before the end of 2025. And usually what happens in the official journal is that it becomes official law 20 days after publishing. But in this case, they've required urgency. So then it will happen after 3 days of publishing, which then means that member states have to transpose it into national law. So that's a bit of context on EUDR. And now I'll give the word to Elisavet, who will take you through the actual technical amendments.
Nice. Thank you very much, Jasper. So in general, the EUDR amendments brought a significant number of changes. Some were fundamentally reshaping how companies need to implement compliance. Others are far more technical, essentially. But before we go any further, let's recap what has actually changed. At the high level, we see a few things standing out. First is the enforcement timing, of course. This was one of the most debated points from the very beginning of the simplification negotiations, and the outcome now is 1 year delay of the enforcement compared to the original timeline, which also had 1 year delay there even last year. The second is the scope of who the regulation now applies to, which has been narrowed a lot. Now only the first operators, meaning the importers and producers, are required to submit the due diligence statement into traces.
Oh, 1 second. It seems your microphone is having some issues. Let's see.
Oops. Let's, now?
Is this working? Yes, it's working.
Amazing. Okay. We just needed to reconnect our mics. Amazing. This always happens the moment we switch between the two of us.
There's always something, yeah.
Anyways, let's continue. So we discussed about the narrowed scope of the EUDR now, which means that downstream operators no longer have to submit due diligence statements. They actually rely on upstream operators doing their job properly, essentially. And this naturally leads to also changes in their obligations as they were outlined. It leads to changes in custom procedures, and all of this follow the intention of relieving downstream actors from further compliance steps. And finally, one notable addition was the formal introduction of micro and small primary operators as a distinct role that have access to a simplified process of due diligence, which essentially, if we dumb it down, is aiming at supporting small farmers inside the EU, since none company outside of the EU can benefit from this. If you move to the next slide, yes, so beyond all these individual changes, there is one point also that really stands out, and this is that the current outcome makes it clear that the scrutiny on EUDR is not final yet. And as of the final agreement, the Parliament also voted to a mandatory simplification review, which is scheduled for April next year. Of course, we don't know how this will play out yet, but in a best case scenario, this could lead to further clarification or streamlining of the processes and reducing a bit the ambiguity. But we could also see a worst case scenario where we risk entering next December again with open questions and unresolved issues again. So while the changes do bring some relief to specific areas, they also signal that still EUDR implementation is kind of a moving target, of course. In the next slide, we're going to see now that even if all of these amendments came through, the core of EUDR did not change. So first, the deforestation-free rule stays as originally drafted. All commodities still must come from land that has not been deforested from 31st December 2020, and also the legality requirement stays intact as well. So all products must still be produced in compliance with the relevant laws in the country of production. And if we take in the next slide, a bit more technically, operators also still need to provide full traceability to the plot of land with precise geolocation. All the data requirements remain unchanged for the ones that are still in scope. And when it comes to the enforcement of the regulation by the member states, the penalties are also exactly as originally designed, with authorities being able to impose fines up to 4% of the annual turnover or move on with confiscating goods and revenues that are non-compliant. And this applies also for the enforcement rates, which stayed the same, with member states having to cross-check 1% of operators from low-risk countries, 3% from standard-risk countries, and 9% in high-risk countries. So I think a small recap is that even though the timelines and responsibilities are shifting, the intensity, at least of enforcement for the operators that remain in scope, is fully preserved. I think that's all in regards to EUDR, so we can move on now to Andreas for the Omnibus recap.
All right, thank you very much indeed, Elisavet and Jasper. Yes, I mean, I will start with the recap of the Omnibus, and of course we also have some slides, which, by the way, we are also happy to share with you. Let me maybe start with kind of an overall reflection, and this is on the next slide, Jasper. And this is a reflection around, I mean, in a sense, the Omnibus has created a regulatory vacuum mostly because of the scope changes. If you descope, for instance, from the CSRD 42,000 companies throughout Europe, that leaves a vacuum. and of course, politicians can, I think, argue in whatever direction based on their political beliefs, but it is clear that this heavy descoping leaves a vacuum. And now it is up to markets as well as responsible business practices to fill these gaps by policymakers. And I think this is also what sets the agenda for the coming year, right? Markets have moved on. We see, in a sense, a mismatch between what politicians decide and what markets demand, because market demand, for instance, also information. Investors demand information, banks demand information, business partners demand information. So I think some of this vacuum will be filled simply through market practices that exist and that will continue to exist. And then there is also the responsible business aspect that some businesses will also simply kind of go into the direction, for instance, of voluntary action because they believe it is the right thing to do, because they believe it prepares them better for the future and it kind of allows them to serve expectations. Now, next slide, please. Let me go to the Omnibus agreement as such. And before I go into the actual agreement, I just want to briefly address a point around context, since I see the question by Rika Günther here around the irregularities in the Omnibus process and also the kind of the ombudsperson and whether this will lead to legal challenges. And a lot of you upvoted that. We need to distinguish a bit. I mean, the current context is the ombudswoman basically said there was maladministration in the Commission proposal. This, however, is no legally binding judgment. So the ombudsperson has no legal powers. Then on the other hand, you have legal opinions by scholars, legal scholars, lawyers also, who basically say the Omnibus actually is misaligned with, for instance, some European treaties. This is quite likely to end up, I think, in the courtroom, particularly the second part, where we discuss the misalignment with treaties. In how far this will be successful is very difficult to judge right now. Personally, I think chances are probably slim. There are precedent cases from the past for these kind of challenges, but keep in mind this is nothing that will happen in the next couple of months because before all of this ends up in the ECJ, the European Court of Justice, or the organizations who file these lawsuits, they first need to go through the different national authorities and then it ends up there. So we talk about a long process. So nothing that would, at least for the immediate future, create additional uncertainty. Let's look into the agreement, the Omnibus agreement. Next slide, please. So this was the final trilogue deal that came out. Remember, for these trilogue deals, you have two co-legislators, the Parliament and the Council, whereas the Commission is not an official co-legislator. The Commission is an expert facilitator advisor in these trilogue negotiations. What we see was at the end maybe not that surprising because the co-legislators were pretty aligned, I would say, on most of the things. The lower CSRD threshold, kind of when compared to the Parliament, so of now 1,000 full-time employees, does not make that much of a difference. We calculated this. It is basically a difference between 92% scope reduction and 90% scope reduction. Both, of course, fully unacceptable. So in that sense, it doesn't really make that much of a difference. Politically speaking, of course, to some companies, it will make a difference. There is a review clause on the scope. I think that is important to say. That's also something that came a bit as a surprise, so something that must have been agreed during the trilogue negotiations. This review clause will revisit the scope in 2029, particularly of the CSRD, and then later on also of the CSDDD. We will need to see. This is not that far down the road, so we talk about 3-4 years here at the end until these processes are opened up again. So there is kind of a likelihood that scope might be adjusted again. Climate transition plans was, of course, disappointing. Here, the Parliament really kind of pushed it through. But remember, the reporting obligations in CSRD still exist. What has been deleted is everything in CSDDD, which were mostly the behavioral clarifications around climate transition plans, and also the legal obligation to implement these plans. Risk-based approach on due diligence, here, again, the Parliament kind of, I think, kept the upper hand, but there are lots of exceptions, for instance, when several adverse impacts are included. So in that sense, it is, of course, a risk-based approach with quite a bit of quite a bit of downsides also. So I think it is not what a lot of people also had hoped for. And then civil liability was scrapped. This is, of course, not a simplification at all. Let's keep that in mind. If you exchange one EU-wide civil liability regime against 27 liability regimes, this is, of course, doesn't simplify anything. Next slide, please. What we see, and I also posted this a while ago on LinkedIn, is this extreme scope reduction. And I think really this is the biggest hit that we take with the Omnibus, both on the CSRD and the CSDDD side. Descoping 90% from the CSRD simply doesn't make sense. Why? Because it also destroys regulatory consistency. This is something that particularly the ECB, for instance, has always pointed out in their opinion, that they believe that this is important. So we are going back in time. And I think a 500 employee cutoff would have made good sense in the context of the discussion. This would have still been 66% reduction of companies, but you would have had still a reasonable basis, I think. From the CSDDD, we have a little bit over 1,000 companies throughout Europe in the scope yet, or still in scope, which is also, of course, not really good. But keep in mind here, just because a company is descoped doesn't mean, that these regulations are no longer relevant, because, for instance, your business partners might ask for this information anyway. So there is, of course, something beyond the pure legal obligation. Next slide, please. We also calculated in a paper how many companies remain in scope. What you see here are very conservative calculations based on the assumptions that all subsidiaries report. In reality, we would assume that only 30% of subsidiaries report. This leaves Germany still with the largest chunk, around 1,600 companies. But you also see smaller EU member states for which I would argue by and large the CSRD then actually is no longer relevant, because if you have 4, 8 or 10 companies in scope, then of course, you know what that means. Also, I think there are challenges here for identifying leaders and laggards by the governments. Governments use a lot of policy tools to steer the green transition, for instance, subsidies. And giving subsidies, for instance, to leaders in the sustainability field will be more difficult in the future, because you need to identify these based on data, and you also need to benchmark and compare them. Next slide, please. So moving on in terms of in terms of the Omnibus, what are important considerations regarding the agreement? In a sense, I think some of the provisions lack realism. And there are these famous value chain caps, both in CSRD and CSDDD. And politicians believe here, they can basically force companies into or regulate what companies kind of exchange in terms of information with each other. I'm less optimistic here that this will work. I heard companies say, look, if we want data, then we maybe don't frame it as CSRD data, but we frame it otherwise. So in that sense, I think there is also a bit of lack of realism here. This, of course, this entire value chain cap discussion comes out of the trickle-down effect discussion. They want to avoid trickle-down effects. Lifting the burden for SMEs was one of the key objectives of the omnibus. But as indicated, I'm rather skeptical that this will really lead to much. Of course, we have added uncertainty due to the review clauses, not necessarily in the short run, but in the long run. So I think this is something that also companies need to keep in the back of their mind, and that things can also go the other way again. Lack of trust in EU policies. I think more omnibus packages are coming, the environmental omnibus, food safety omnibus, and so on. The list by now is very long. It is a bit unclear where the journey is going. I think our little survey in the beginning, although probably a bit biased, also showed that a lot of you have lost trust in the EU. And I think the EU needs to be very careful in navigating this in 2026 in order to not completely overdo things. The good news is the wait and see is over, something that kind of was very much on the agenda for many in, Jasper also mentioned it, in 2025. Of course, I also talked to various Danish and German companies, for instance, who kind of said, we want to wait until we have a final kind of agreement with the omnibus, and then we go ahead. This certainly is over now, and I think 2026, in a sense, will be hopefully more action loaded. Next slide, please. So let's look a little bit into the future. Where do we go from here? Obviously, I don't have a glass ball. I cannot predict the future. I also don't want to. I'm a researcher, so it's for us. The future is something, of course, that is by definition uncertain. Nevertheless, I think there are some trends which we can look into. Next slide, please. And of course, the biggest trend that we will see is, or the biggest question we need to ask ourselves is, what happens, for instance, on the CSRD side with the 42,000 companies that no longer have to report? I think we will see a significant chunk of them moving into this voluntary regime. But then the question is, what kind of voluntary regime will we see? And I think here the EU probably still needs to do a little bit of more work in order to clarify things, because at the moment, I think things are not that clear. So I distinguish here between voluntary reporting that is more proactive, where you kind of really choose a certain standard framework and then you report according to the standard framework. From what we are hearing, first signals from the field is quite a bit of companies will go for what I would call ESRS 2.0. I think this is how Jasper called it earlier. The ESRS 2.0, maybe even in a lighter version than the official revised standards. And this is simply because you have companies that are actually pretty big, 900, 950 employees, maybe with significant turnover. And for them, the VSME simply doesn't cut it. So the Commission made clear there will be no additional standard between the ESRS and the VSME. So companies essentially, if you want to stay within the European standard frameworks, you need to choose between VSME and ESRS, and maybe some sort of adapted ESRS. It will be very interesting to monitor that. We are also currently doing some research on this here, where the journey is going. I think a lot of it has also to do with corporate size and also the experience of companies with reporting. How long have you done it, and what do you expect yourself? We will probably also see companies continuing to use GRI and also ISSB, although of course ISSB might be challenged. Might be challenged in terms of interoperability. The revised ESRS leave at least some small questions open there. And then there is the voluntary reactive side, and I think this will also cover quite a bit of businesses, because what I call bilateral disclosures here, these are the kind of disclosures that come from your bank. You want to take out a loan, and the bank basically tells you, well, you know, we want carbon data because this is for us the risk calculation. So in that sense, of course, that needs to be covered as well. But these companies are unlikely maybe to use standardized frameworks, but they collect information which they then pass on. Next slide, please. For us, the researchers that I'm working with, one interesting question is what will motivate this kind of voluntary reporting, voluntary due diligence in the future. What we see right now particularly is expectations on companies, shifting expectations on companies, as well as the anticipation of these expectations in the future. I talk to companies who say, we see that the pressure is building up. We see more kind of requests, for instance, from business partners. So the foresight also plays an important role here. There is, of course, the value creation element, identification of risks, identification of opportunities that kind of are linking to the value drivers that companies have. I think this is kind of a well-established argument. We shouldn't make, that's important, a universal argument out of it. No, reporting doesn't always kind of magically kind of create value. It depends a lot on how you do it, why you do it, and the context around it. There's also, I think, a communication question here. A lot of firms will go for voluntary action because whenever you apply frameworks and standards, that allows you to have a platform for talking to each other. When we did interviews, for instance, on CSRD, one of the things that we found was CSRD, in a sense, was also an organizing tool for discussions within companies. So this order that the directive created was something that companies appreciated. And I think this is also a strong argument here for voluntary reporting. And then last but not least, of course, you have the values element, living your values through, for instance, reporting due diligence on a voluntary basis. We shouldn't underestimate this. These are often family-owned companies, small companies where owner and manager are in the same role. So the values-based discussion is an important discussion. And I think maybe this was too much sidelined in prior years where we had too much of a compliance discussion. Next slide, please. Finally, let me kind of say, particularly on the expectations, what I called expectations on the slide before, we need to dig deeper. We need to understand that better, because pre-omnibus and post-omnibus expectations towards business are different. When the CSRD came in 2025 with the first reports on financial year 2024, also expectations changed quite a bit. And I think this is a reality we need to look into, a reality that banks ask for this data, that business partners ask for this data. Some governments ask for this kind of data if you want to participate in public tenders. And then there is also, it's actually interesting to also look into studies on this. There's also a competition effect that companies, of course, see always what the competitors are doing, and you don't want to be left behind. So this isomorphism is also quite strongly out there. All right, last slide, please. This is it from my end. I'm happy to discuss with you. I see there are lots of questions, so Jasper will have a hard time to pick the good ones. Over to you, and thanks for listening.
Thanks, Andreas. Yes, indeed. So I'm seeing a lot of questions coming in. Once again, if you do have questions, please ask them in the question section in the bottom right, and I will be prioritizing by the number of upvotes. So if you don't want to ask your own questions, but you want to support other questions that already have been posed, feel free to upvote them, and then we will see which ones to prioritize. So I'll just get right into it. And what I'll do is I'll read the question out, and then I'll decide, based on my interpretation, who's best suited to answer it. And then, of course, maybe Elisavet, Andreas, or I will jump in as well if we have an opinion on it as well. So first question here from Patrick. What could be the outcome of the EUDR revision in April 2026 with conducting a simplification review and presenting a report? Are major shifts expected? Andreas, do you have any perspective on this?
Yeah, it's indeed a real good question. I think the report, as it is written in the kind of revised regulation, is supposed to analyze administrative burden. From a research perspective, I can say this is difficult to do with a regulation that has not even been implemented. So I see a data problem here. How do you want to operationalize that? Personally, I would not expect major regulatory changes based on this. However, the problem is if the Commission comes up with such a review, they may, and the regulation here says may, they may come up with a new legislative proposal. The moment that they come up with a new legislative proposal, they open up the file. And this is the tricky moment, because then it is a little bit beyond their control what happens with it, because then the council and parliament, the co-legislators, can chip in with their own opinion. And as we know, the appetite right now in the council and in the parliament is pretty high for further simplification. So sorry that I cannot give a more straightforward answer to this, but I would judge it right now, the likelihood of significant changes as rather low. But this is an informed guess, nothing more.
Thanks, Andreas. Elisavet, do you have anything to add as our in-house EUDR expert?
Yeah, I think Andreas, of course, explained it very well. If I could add one more educated guess, that would be that any simplification that we might see could potentially be more focused on the small operators, small micro primary operators. So there were a lot of rumors here and there that things that will come up will be mainly on how we can even more help smallholders not get burdened by the regulation. Of course, this does not mean that this will be all, but there was a clear indication towards this, definitely.
Perfect. But yeah, really good question, Patrick, and also something that definitely has also been discussed internally plenty of times. Here, a question from Katrin, 18 upvotes. I've read that the revised ESRS will probably be subject to another public consultation. Is it likely that there will be any further significant changes, or can companies that will be subject to reporting requirements from 2027 onwards start focusing on the revised ESRS for preparation? I can have a first crack at this question, and then Andreas, jump in if you have anything else to add here. So what we've seen is that indeed the EFRAG, the organization that's responsible for drafting the new ESRS, has finalized their work. So they've done that in quite a short time frame, including also the public consultation period. And everything basically that they usually do has been shortened by quite a bit in order for them to reach their deadline, which was the end of October, and then they got an extension to the end of November. So that's now been finalized. And we're seeing around 320 data points versus the original around 1,100. What happens now is that it goes to the European Commission, who will then basically have another go at confirming whether these data points are final. I've asked this question as well to some people inside of the European bubble. And the answer I got is that, yes, there might still be some changes, but also from what I've read and from what I've heard, I think a section where these changes might occur is, for example, in the phase-in data points. So when will certain data points be phased in, and for what year will they be phased in under the original ESRS? That was one of the kind of key points that they mentioned for certain companies to report only on certain data points. If, for example, there were over 750 companies, then they would have to report in the first year, and if they weren't, then they can report in the second or the third year. So that's something that I'm expecting. I think that for now, they hopefully will not focus on too many changes, because I think 2025 is also for them the year of regulatory changes, and then hopefully 2026 will be the year of regulatory stability. So I'm hoping that they also see it as that, and that we can move forward with the current version. Yeah, that's my perspective. Andreas, do you have anything to add there?
Nothing substantial. What I have heard is that, of course, corporate lobbies have already expressed opinions on the revised ESRS, which keep in mind this is a draft. This is not a final document, and it was always communicated as a final draft. So things can still change. But I agree with you, Jasper. I would also not kind of foresee significant changes. I think if something changes, we probably talk about kind of tweaking a little bit at the ends here. Also because the 71% reduction in data points fully complies with the kind of the task that EFRAG was given. So I think the Commission will be careful to kind of go much beyond that.
Yeah, definitely. Also considering that the original objective of the Omnibus was to reduce administrative burden by 25%, I think EFRAG has definitely complied with that objective. So hopefully we'll see stability from here on out. Question here from Dino, 16 upvotes, EUDR supply chain. What due diligence obligations remain for companies other than the first importer? I think, Elisavet, you're well equipped to take this.
For sure. So essentially, now if you're not the first importer, you only have responsibilities if you are the first downstream actor. In case you are, you need to just preserve the traceability information and the DDSs that you receive from your suppliers, who are the first in line operators. However, other than that, currently the responsibility for other downstream operators and traders is completely excluded from the scope of the EUDR.
Perfect. Andreas, I'll move on to the next one. If you have anything to add for these questions, feel free to jump in. Then got a question here also on EUDR. So also once again, Elisavet, I think you're our go-to person here. Is the exporting excluded from EUDR scope for all downstream operators, including also the first-in-line downstream operators?
Yes, actually, that was one of the latest amendments that was added after the Council's proposal on this whole trilogue discussions. In the end, when it comes to exporting out of the EU, there will be no responsibilities in customs for EUDR. So a DDS will not be asked from you if you export, even if you are the first-in-line downstream operator.
Perfect. Got a question here from Rika. Andreas, I think you're a good person to answer this one. How likely is it that the irregularities in the omnibus process, as mentioned by the NGOs and confirmed by the ombudsperson, will lead to legal challenges against the outcome?
Yeah, I mean, I already addressed that briefly during my presentation because I saw it on the screen. Let me just re-emphasize the ombudsperson and the legal complaints. These are two different kind of things. The ombudsperson looked into the non-compliance of the Commission with the better regulation guidelines. This was what the complaint was about. And she basically said, yes, there is a problem here, but keep in mind, these are guidelines, right? Important to say, and this is also what the Commission always emphasized. They said, no, you know, this is these are guidelines. There's no compliance obligation here. And then you have the legal assessments where the omnibus is kind of non-aligned with some core EU treaties, particularly, by the way, the CSDDD of it. I think this will probably go to court, looking at the legal opinions, but this will take time. This is nothing, you know, we don't talk about 26 here, because this will first need to pass through all national authorities, and then it can go to the European Court of Justice. So we probably talk 2-3 years down the line before anything can happen there. I'm not a judge. I cannot tell you how likely it is that something has come out. What I can tell you is there have been cases in the past where actually the Commission had to rework things. Yes, that has happened.
Yeah, it's a very interesting period, I think. And also for those that have been keeping an eye on the EU in the last year, I think it's been quite a paradigm shift in the way that business is done. Also, you know, the fact that alignments, coalitions that were considered impossible before are now suddenly very much the reality of what we're seeing today. So interesting change. I think something that we should be very aware of going forward. Question here from Josephine. How should companies in scope of CSRD for the 2025 financial year practically act in light of the proposed omnibus transition exemption, given that member states have up to 12 months to transpose it into national law, while annual reports in, for example, Sweden must be filed within 7 months after year end? Yeah, so really good question. Maybe I'll have a first go and then I'll give it to Andreas. So what I'm expecting here is that until it's the final law, you have to comply with the existing ESRS. And this is something that's also been made very clear. So it's still a draft, as Andreas also mentioned. And this is going to be the case until it's accepted by the European Commission and it is transposed into national law. So for now, you have to report under the existing ESRS and then move on to the new ones. But I'm sure Andreas has something to add here as well.
Yeah, I think the question is more around the transition exemption for the CSRD. If you read the legal text, it says member states may. So you do not know whether member states really will take this up. But I see the point here around the timing. I would presume that those member states that go for this transition exemption, they would act very, very quickly, or they would need to act very, very quickly on this. So the omnibus final legal text will be published in the official journal very shortly, and it then basically enters into transposition, which then of course means if a member state wants this exemption, this transition exemption, as it has been called in the final legal agreement, then it would also immediately more or less need to transpose in order to provide legal certainty.
Thanks, Andreas. Good to have you on the call with us for the questions that are a bit too technical for my understanding as well. But so here a question, where did it go? So here a question from Saskia. If a company now falls out of scope of the CSRD due to the Omnibus changes, does that also mean that they fall out of the scope of the EU taxonomy requirements? Yes, they do. So the EU taxonomy is directly in line with the CSRD scope, and therefore, if you fall out of CSRD, you also fall out of EU taxonomy. Andreas, anything to add here?
No. Only thing, that was the reason why they didn't open the regulation as such. The Omnibus did not open the taxonomy regulation. They opened the taxonomy through the CSRD in order to reduce the scope. That was criticized, by the way, quite a bit in the parliament, where people kind of said, this is not so democratic actually, to kind of do it through the back door. No, but what Jasper said is absolutely right.
Yeah, and maybe to add on top of that, so while there wasn't a full legislative process for EU taxonomy, what we're seeing now is some simplifications. So there's going to be a materiality threshold of 10% for if all of your activities together are less than 10% of a certain KPI, so CapEx, OpEx, or turnover, then you can omit them. There's an OpEx materiality threshold. So there's a couple of things that they have tweaked, but the fundament of the EU taxonomy is still the same. So let's see here all the questions. Question for Elisavet, I think, on EUDR. Do large company traders no longer have to report as operators?
Exactly. So essentially now, as per the previous question, if you're not the first in line or the first downstream actor, you're essentially out of scope. And if you're a trader or downstream operator, your responsibilities have now been aligned only with responsibility for traceability and keeping the records of DDSs.
Perfect. And then maybe to stay in the EUDR train of thought, question here from Almut. Do the first downstream operators also have to keep records, or only the first downstream operators?
Yeah, I think I actually scanned through the questions, and there are quite some similar one to this. So I think we can cover many with that. So first downstream traders and first downstream operators are the same thing essentially after the simplifications. Whatever we discussed about traceability and keeping the records, that is what you have to do regardless of if you are manufacturing the products or if you're just trading them as such based on the new amendments.
Perfect. And then here, another question on CSRD. So do companies need to meet both thresholds, 1,000 employees and 450 million in turnover, or is meeting just one enough to fall under the CSRD? So I see Andreas nodding as well, but it's both. So you need to comply with both in order to have to comply with CSRD. So what we're seeing is now that 1,000 employees companies may reach. So for example, we have some customers that have those 1,000 employee thresholds, but they don't have the 450 million turnover threshold. So I think that's going to be quite the bottleneck for many companies to report.
And it's a bit problematic, to be honest. This kind of moving from the 2 out of 3 into this regime. Think about airline leasing industry. Hardly any employees, right? They will be de-scoped, but really a big environmental impact. So yeah, I think it is also quite controversial in terms of how the scoping has been designed.
True. Yeah, maybe that's an interesting follow-up question for you, Andreas, based on kind of the scope of CSRD in terms of employees. Question here from Dino, the CSRD scope review. Which holdings are excluded from the consolidated reporting? What is exactly a financial holding?
I got this question quite often, actually, on the financial holding, and I must say, interestingly, it doesn't. At least when I read it, I didn't see a definition of it. So I would actually need to pass that question. I would also need to look it up. Usually, it is when you look at EU legislation. They refer to other legislative texts for definitions of also accounting directives and so on. We would need to look into, or I would need to look into that first in order to really give you an informed answer here. What exactly is a financial holding and how it is defined under EU law?
Yeah, I would also have to look it up. So good question indeed, something that we will take into account. And let's see. Yeah, I think we have your email address, so we'll try and find the answer. And if we do find a suitable answer for what a financial holding is, we'll let you know over email. I'm seeing here a question from Anand. Is there any information about the NESRS? I'm not sure if N means new or if it's a typo or if it's something that I'm not aware of. for non-EU companies to report for financial year 2028 in 2029. So that's the smaller companies, the SMEs. Yeah, I'm actually not too sure about this. So before I give an answer, I'd like to give it to Andreas to confirm my thinking.
I'm also not too sure, to be honest, what exactly that means for non-EU companies. No, I would need to look it up.
Yeah. Okay, that's also something that we'll put on the list of things to research. And yeah, we'll get back to you over email if we find something. But that's also always the good thing for us in these Q&As, is that some of these questions are very detailed, very niche, but they help us also understand the bigger picture. So thanks for asking, and we'll get back to you with an answer. VCME question here. So let's put that on the screen. Question from Marie. In Omnibus, it is noted that the upcoming Voluntary Delegated Act aims to substantially reduce the trickle-down effect to undertakings with up to 1,000 employees, rather than just SMEs, as is currently the case. So will we have two standards going forward, the VSME and the upcoming Delegated Act? So what I'm expecting here is that the VSME will be applicable to any company that wants to voluntarily report, but as also mentioned by Andreas, it is quite a simple, straightforward framework with around just above 100 data points, and those data points are very straightforward. So I think CSRD will remain for some companies the one to report on, but I don't think that companies will report on both. But happy, Andreas, if you have any more kind of industry or practical insights on this question as well.
So I do not think that we will have two standards going forward. We will have kind of, once the VSME is confirmed through the Delegated Act, then we will have the one VSME going forward. The Commission has made very clear that they do not intend to kind of create another standard. There was some discussion around this, precisely for what I said earlier, that some kind of said, look, the VSME originally was designed actually for companies with fewer than 250 employees. So this doesn't really fit the needs of companies with 800-900 employees, because these companies are much bigger. But they didn't want to go down that road, understandably, of course, because they do not want to kind of be a standard or provide too many different standards, maybe also competing standards. So that's why I think what we will have in the future is the VSME, and then the ESRS, and then maybe the voluntary adoption of ESRS by some companies that are still out of scope. And they, of course, have flexibility, right, to also apply the ESRS maybe in ways that it is not kind of fully aligned, as long as they don't want to get assurance for it.
Thanks, Andreas. I love seeing kind of the collaborative aspect of these webinars, because someone just posted the definition of a financial holding in the chat. So I'll read it out here for everyone. Thanks, Sina, by the way. Financial holding undertakings means undertakings the sole object of which is to acquire holdings in other undertakings and to manage such holdings and turn them to profit without involving themselves directly or indirectly in the management of those undertakings, without prejudice to their rights as shareholders. So this is from Directive 2013-34 EU. Not sure exactly top of my mind which directive that is, but thanks, for that definition. So I hope that helps answer the question from the person that asked the question about the financial holdings. Now let me go back up to the questions to see if any questions have climbed the ranks in terms of upvotes that we have missed for now. But it looks like actually we're doing quite well in terms of going top down in terms of the most upvoted questions. Let's see, question here from Dino on the CSRD scope. So also, Andreas, I'll give this to you if you don't mind. All thresholds are now referred to one financial year and no longer 2 consecutive financial years, correct?
Correct. This is the way I understand it as well.
Okay. Nice and concise. So hope that answers your question. Question here from Lotta. So question on EUDR. So we all know who that question will be directed to, but were all amendments mentioned in the provisional agreement agreed on?
Yes, so yesterday they voted one time for the whole provisional agreement, and we saw the outcome of the vote on Jasper's slides.
Exactly. So
including even the exclusion of the 49 category of printed goods, for example, that we had in a previous webinar mentioned over and over again, for example.
Exactly. So it's now final, and that's, I think, the one good thing about the end of the year period is that also the European Commission and Parliament and Council have a very strong urge to finish all of this in time so that we finally get that clarity. But also, of course, because EUDR and CSRD were planned to take effect in their current form if we don't have a newer version by the end of the year. So in order to kind of avoid that very strange twilight zone in the beginning of the year where there's no regulatory clarity and technically companies have to report, they want to get this out now. So that's why it should be definite. And then let's see another question here. Yeah, interesting question from Mackenzie. Do you think that we can expect all environmental regulations, CSDDD, CSRD, EUDR, CBAM, etc., to be finalized by the end of next year? So I'm actually hoping that CSRD will be finalized. Well, CSRD as a regulation will be finalized now. And then, of course, the ESRS that sits under that will be finalized by summer 2026, with hopefully only a very few minor amendments to that. I'm hoping we won't see many changes there. On EUDR, yes, so what we're expecting there is that there could be simplifications in April. There probably will be simplifications, but I'm also expecting those to be defined definitely before the end of next year. CBAM, I think they made now recently an agreement again on the new scope, but perhaps on CSDDD and CBAM, Andreas, I don't know if you have more to share there.
Well, no, only, of course, it depends what you mean by finalized. I mean, finalized in a sense, it is for companies once it is put into national law, because we talk about directives here, right? And so I think from a company perspective, you need to watch the national transposition process in your respective country, particularly for CSDDD and CSRD. And particularly also because there still is flexibility in these transposition processes. For instance, on CSDDD, member states can go beyond the scope. So they can also lower the scope. Again, the final agreement leaves some flexibility here. So in that sense, I think probably by the end of next year, yes, we will have transposed CSRD and CSDDD, probably also CBAM, and the EUDR will probably also be in a final shape due to the simplification review that comes in April. If there is a legislative consequence out of the simplification review, I would expect that this will be a rather swift process then.
Thanks, Andreas. Very interesting question here from Marine. I think that's a good question for you, Andreas. This is also something you've previously covered in your slides. Can you explain why the value chain cap lacks realism?
Well, I think I heard many companies arguing that. So they basically argued, well, you know, it's of course in a sense a construct that is there and that ideally would lift the burden on companies. However, then you have companies who kind of say, well, but look, I want that information, which maybe kind of would be included in the value chain cap. And maybe then I ask for it in a different context and not in the context of the CSRD. I'm not so sure whether this is legal or not, but at the end of the day, I think believing that you can restrict the information exchange between independent companies on sustainability data, I think is quite is a quite significant assumption that is underlying this belief, because companies might just exchange information that actually goes beyond this value chain cap. So I'm not saying it is completely without effect. What I'm saying is there is, of course, a certain assumption that comes with it, and we will need to see whether that actually is implemented as politicians envisioned it. I would have my doubts, to be honest.
Yeah, it's an interesting time for this kind of political ambition. I would say we take one more question for, so we can actually round up in time and get everybody out for lunch. So let's have this question here from George. What does the EU have for further ESRS guidance documents, particularly for auditors? This has been a problem with Wave 1 auditing consistency and needs to be solved. So to provide a bit of context here, so what I've seen, at least from auditing firms in the Wave 1, but also reporting firms that didn't know exactly how to report, there was quite a bit of ambiguity when it came to the DMA, when it came to the ESRS data points, on what exactly the auditor wanted or how to interpret certain requirements. And what I know that now is being done by EFRAG is that they're providing quite a bit more context in the form of supporting documentation. So I know, for example, the non-mandatory implementation guidance is one of those documents that they're sharing. And they're also sharing a few other files that will provide more clarity on that. But also the ESRS itself, the ESRS 2.0 provides a lot more clarity. So where questions beforehand were more ambiguous and more written from a very technical, dry perspective that was hard to understand for everyday people that don't work with these regulations, that has been now simplified quite a bit. So I think that's a very welcome change. Andreas, do you have anything to add on this question?
No, I think you said it all. We will expecting more guidance in the new year, particularly also for auditors, and I think this was missing in the beginning, right? So it's unfortunately now coming a little late, but it's good that it is coming.
Exactly. And with that, it's 12 o'clock, which marks the end of our session. So I'd like to thank everybody for the really nice questions. I really enjoyed going through them and also learning myself a bit about, the perspective that Elisavet and Andreas shared with us today. And Andreas, a special thank you to you as well for joining us on this session. I found it really interesting to, speak together on this topic and also, exchange information, exchange knowledge, but also, hopefully end the year with a bit more information than we started it with. So, thank you, Andreas.
Thank you.
Thank you, everyone. And
thank you all.
Hope to see you in the new year. Bye-bye.
Thank you very much.
Take care. Bye-bye.